Okay, so as I just shared with you, this is a complete story telling of dramatic shift in market power. Okay, and there are four patterns, about three candle patterns we are going to learn today. And three candle patterns are generally more reliable than single or double candle patterns because they reflect a sequence of price actions, showing a confirmed shift in the market psychology. All right. And the first one we're going to learn today, it's going to be a bit different. Yeah, I will show you two patterns at the same time because they are opposite. Okay, so it's obviously for you to easy to have the comparison. And the first one, we will have a pair of patterns, three candle patterns is morning star and evening star. And this is how does it look like. When we have the comparisons, meanwhile we're learning for two patterns at the same time, it's gonna be help you easy to remember. Okay, on your left side is gonna be morning star. Okay, and on your right side is evening star. And you will see the first candle of morning star patterns is a bullish one, right? And after that, it's gonna be a very small uh bullish candle after that. Yeah. And the last one, the third candle is gonna be a very big bullish candle with a big body. Okay. And for Morningstar, it's looking for a strong downtrend. Okay. The pattern starts with a large bearish candle here, followed by a small body indecisive candle. And it confirms by a large bullish candle that closed well into the body of the first candle. Okay. And the story is sellers win control, then they got stuck. Okay. And now buyers have taken over. On the other hand, for Evening Star, it's looking for a strong uptrend. The pattern starts with a large bullish candle, followed by a small body indecisive candle, and is confirmed by a large bearish candle that closed well into the body of the first candle. Okay, and the story is buyers were in control, then they got stuck, and now seller taken over. Okay, so that is the meaning and the difference between two opposite patterns for this pair. And also for the morning stars, there's gonna be some types. Yeah, it's gonna be some types of morning star you will see as follow. I will show you both types of for morning star and evening star. Okay. So this is the basic one. Yeah, and for the different, it's just the candle, the second candle. Sometimes it's this bin par. Sometimes it look like a doji, and sometimes it have a gap between the second and the third candle. And on the other hand, for evening star, yeah, you can see that it's not always the second candle is the bullish or bearish one. It can be changed, yeah, and be flexible sometimes. And the second candle sometimes is gonna have doji. It's look like a doji candle, and also have the gap between the first and the third candle. So is it okay for you to remember the shape? Well, we need to look at this and yeah, keep on look at that for a while and remember the shape because these patterns contain three candlesticks, three consequence candlestick. Okay, for you to easy to remember that you need to remember the shape of the second candle. Okay, it's usually a smallest, okay, the smallest one. And now I will show you how to identify stop loss, entry zone, stop loss, and take profits for this one. Okay, let me zoom it out for you to see it clearer. Okay, so this is the Morningstar candlestick pattern, and the entry zone is the open price of the next candle. Okay, of the next bullish candle. After the third bullish candle close, this is where you set entry zone. You enter buy trade immediately after the third or bullish candle close. For the stop loss, you should set at the lower wicks of the second candle or the lower price of the previous level. It also depends to the risk tolerance you can accept. Okay, you place stop loss just below the low of the pattern. And more especially, you can place the stop loss just below the low of the second or the smallest candle of the first candle, depending on your risk tolerance. For the taking profit, you can consider to the previous swing high, okay, swing high. Or follow the risk reward ratio, 1/2 or 1/3. And for the TB. Okay, we'll highlight this one. Okay, so it's kind of easy for us to, when we recognize Morningstar candlestick patterns on the chart of any asset, okay? And after the candle after that, you can enter the entry. Yeah, entry levels. And the stop loss level will be set as the lowest price of the second candle. Okay, and take profit, you can follow risk reward ratio or the previous resistance zone. Okay, so this is how you set entry, stop loss, and take profits level for Morningstar candlestick patterns. Okay, the key point you need to looking for Morningstar at the resistance level. Okay, they must be appear at the resistance level, support level after a downtrend because this is the signal of the bullish reversal. Okay. And for evening star, it's gonna be opposite. Even evening star candlestick patterns. If you want to set entry zone, this is a signal for bearish reversal. So firstly, we need to identify this pattern appears at the resistance level. Okay, at the resistance level. And you enter a sell trade immediately after the third candle close, which is the bearish one. Okay, right after the third candle appears as a bearish candle, we need to enter the entry immediately. And for the stop loss level, yeah, like opposite to Morningstar, stop loss level, you'll be set at the highest level of the second candle. okay, above the height of the pattern. The ideal position is just above the height of positions, the height of second or the first candle. Okay, because we need to have some distance, yeah, to avoid the stop loss sweep. And for the take profit, we can use the previous resistance zone, support zone, or follow risk reward ratio as well. Support zone. Okay, so this is the theory for you to enter how to set up the signal based on these two patterns. Oh. And obviously you can watch this example and it will easy for you to understand. Okay. It's better than read this theory, right? Okay, so this is how morning star and evening star candle look like and how we set the stop loss, entry zone, and take profit level for these two opposite candlestick patterns. Okay, so now we will come to the next pair. 3 white soldier and 3 black grounds. As usual, I will show you the photo of these two patterns at the same time. Okay, as you can see that 3 white soldier indicate for the powerful uptrend, right? And for the 3 black crowns, it indicates that the market in a strong downtrend. And the position of 3 soldiers is often happen after a downtrend, right? The patterns is 3 consecutive bullish candles, and each candle body is substantial, and it's closed at a higher high than the previous candle. You see that? It's forming higher highs than the previous one, okay? The stories that the market want to telling us is the sellers are exhausted and buyers have taken back control with force. On the other hand, 3 black rounds is look for an uptrend. Okay, it will appears after an uptrend. The patterns is 3 consecutive bearish candles, and each candle body is substantial, and it's closed at a lower low than the previous candle. The stories that the market wanting to tell us is the buyers are exhausted and the sellers have taken back control with force. Okay, so on the chart, I will show you later. You will see this type of 3 candlestick patterns is happen all the time. Okay, I will show you the example later, right after we finish the knowledge, the theory of today's lesson. And now I will show you the comparison table between bullish 3 white soldiers and bearish 3 black crowns. I believe that this comparison table will help you a lot in understand the basic feature, okay, the basic feature of these two similar pattern. Okay, first one, we need to talking about trend indication. For 3 black grounds, its downtrend begins. Okay, and for 3 white soldier, this is the uptrend begins. For appearance, 3 black grounds, it will have 3 consecutive long red or black. It depends to your setting on your chart. Okay, red or black. It depends to your choice. And for the white soldiers, it's usually a 3 consecutive long ring or white candles. And prior trend for 3 black rounds, it forms after an uptrend. And for 3 white soldier, it forms after a downtrend. We need to remember the context of each pattern to use it to identify the entry zone for the best position. Okay, and reduce our losing rate. And for the candle structure of 3 black rounds, each candle opens within the previous candle's body and closes lower. Yeah, and opposite 3 white soldiers, each candle opens within the previous candle's body and closes higher. And for the market sentiment, 3 black rounds pattern telling us that sellers take control, pushing the price down. Okay, and on the other hand, 3 white soldier patterns telling us that buyers take control, driving price up. Yeah, obviously that you will see the bullish candle is getting more powerful with 3 white soldiers, and for the 3 black rounds, okay, the powerful bearish momentum is increasing steadily, and the momentum will be identified by the body of the candle and the trading volume. Okay, the trading volume. And now I will move to the next part that help you how to identify entry, stop loss, and take profit for these 2 patterns. Okay, so this is the illustration pictures that for entry level and stop loss. Regarding to entry level, as you see here, you can enter a buy trade immediately after the third or bullish candle close. Okay. The third candle close and you realize that, oh, the body of the candle of the third candle is very big and higher than the previous one. So this is, you can confirm, yeah, the entry level after that. And this is also called if, yeah, as this example, if the previous level is the resistance like this one, and the fourth candle will be the breakout, yeah, the breakout level of this level. So yeah, you can confidently enter the entry, the position for this buy trade. And stop loss we will set as the lowest level of the first candle. Stop loss just below the low of the pattern. Okay, just below the low. And for the take profit, you can use the previous resistance level or follow risk reward ratio as well. Okay. Risk reward ratio, if your stop loss level is around 50 pips, that you need to follow the target take profit, will be 50 pips either, right? And if you or you can consider to set the take profit based on the previous resistance zone of the chart. So there are 2 ways for you to identify the take profit. Okay, so this is how we set up entry, stop loss, and take profit for 3 white soldier. Okay, and yeah, you need to wait for the time that the third candle close and the fourth candle start forming, we need to enter the entry zone immediately. And the entry zone that is going to be opposite to the three black crowns candle patterns. Okay, you can enter a sell trade immediately after the third bearish candle close. Right? It's opposite to the white soldier candlestick pattern. Bearish candle close here. This is where you set the entry zone. For stop loss, above the high of the pattern. Okay, an ideal position is just above the high of the second or the first candle to avoid stop loss weak. Okay, remember this. I will bold this because this point is very important for you to avoid stop loss weak. Yeah, this is cause you the irritations when you trade for a long time and destroy your emotion and your psychology when you continuous hit the stop loss weak. And for the take profit, you can use Fibonacci level. It's usually have the opposite momentum at the level ending with 618 or 05, okay, or 1. And normally 618 will be have a lot of reactions when it touches to this area. And that's it. I just introduced with you the patterns. Yeah, the specialist features of four patterns. This is the four patterns we need to learn in detail because it's usually happened in the real trading. For the Morningstar, I guess that it's a bit difficult for you to remember how it's gonna be look like because it's not always follow this. In the real-time chart, you will see the candle have very, very long upper or lower wicks. And this is the noise that the market always cause to us. And for one shape, for one type of each patterns, it's gonna have opposite color. Some is in green, some are in red. Okay, so we need to practice to looking for on the real-time chart many times. Just this action by these actions only help you to remember for a long time. Okay, and you can the signal that indicate these are morning star or evening star. You need to looking at the second candle. This is the smallest one. Okay, this is the smallest one between the first and the third candle. The big first and the third candle. So that is the tips for you to remember how is morning stars and evening stars look like. And for the three soldier or three black crowns, it's super easy for us to recognize it, right? There's just consecutive bullish or bearish candles that happen. Okay, for the three white soldiers, it will happen after a downtrend. And for the three black rounds, it's happened after a strong uptrend. Okay, so I need your to practice, to be disciplined, to practice, to looking for these patterns on a real-time chart to help you easily to understand and remember for the shape. And now it's gonna be a bit different for this lesson. I will indicate with you. Yeah, I will help you how to recognize the phone signals from three candle patterns because we need to go deeper for this, and the markets always trap us. It's always happen all the time. So for this today lesson, I will show you the phone signals from three candle patterns. How's it gonna be like? And the first one we need to looking at the pattern's location. Hang on, I need to change the format. Okay. First thing, we need to take a look at the pattern's location. For phone signal, it happens when the pattern appears in the middle of a strong trend or in a sideways drooping market. Why? Why is it going to be happen? A reversal candlestick pattern is only meaningful when it appears at a potential turning point. A morning star is only reliable. It's only reliable when it's at a strong support level after a clear downtrend. A three white soldiers pattern in the middle of the downtrend. It's just a market noise. Okay. Remember for this point, it will help you a lot to avoid the market trap. There is going to be two scenarios we need to remember. Okay, never mind for the color. I will change it later. A morning star is only reliable when it's at strong support level. Okay, and three white soldier patterns in the middle of a downtrend is just a market noise. Okay, so we need to pay attention to the patterns locations. That is the first thing. Okay, we need to remember. All right, to stay away from the market noise and have the mistake. And the second thing we need to pay attention to is the strength of confirmation candle. The phone signals when the third confirmation candle is weak, small, or had a long wick. Why? A three candle pattern is a story of power transfer. The third candle must be a strong confirmation that the opposing side has taken control. If the third candle is small, it signals the market indecisions and a lack of conviction to sustain a new move. Okay, so this is when you need to remember. The third confirmation candle is weak, small, or has a long wick. Okay, so let's go back to the previous patterns. Yeah, the third candle will be the confirmation for you. For all four patterns we learned in the beginning until now. If you see that the third candle having small body and long wick, and this is showing that the current momentum is reduced. Okay, and it's not powerful enough to be a reversal signal. Okay. And the next point we need to pay attention to is no multiple time frame confirmation. A false signal when the pattern on the smaller time frame contradicts the trend on a larger time frame. And why is it? Always use a larger time frame like 4 hour to determine a main trend. If you see a morning star on 15 chart, but the 4-hour chart is in a very strong downtrend, that 15 patterns is likely just a small correction before the larger downtrend resumes. Trading against the higher time frame trend is very risky. Okay, at this point, like I always share with you, trend is our friend. Okay, and the trend in the bigger time frames is more reliable than the trend in the smaller time frame. And if you want to identify the exact trend that the market is follow at the same time you're observing the chart, you need to observe the big time frame like 4 hour or daily, or at least 1 hour chart. Okay, and the smaller time frame need to have the appropriate the patrons appears at the appropriate locations. It's gonna be look like. Okay, so this is need generally they need to be at the same direction. Yeah, just help you easy to understand that they must be the same direction from the big time frame to the small time frame. Okay, and follow the trend. Trend is our friend. And the fourth factors that the markets usually have noise is lack of volume. Okay, trading volume is the one we need to concern. Okay, and the false signal is when the patterns form with a low trading volume. And you need to observe the trading volume to make sure that the patterns is confirmed is right or just a false signal. Okay, by open the trading volume on the chart. A strong reversal requires a significant shift in order flow. This is more clearly seen in the volume indicator. Okay, and if a reversal pattern forms with low volume, it suggests there isn't enough market participation to sustain the move, and the signal could be fake out or a short-lived movement. And this always happens in a small time frame, like 5 minutes or 15 minutes. Okay, so yeah, this is just to make sure that the patterns form correctly and avoid a market trap. And the last thing we need to concern, sometimes too perfect, too good to be true. Yeah, this is our last point, too good to be true. The false signals is happen when the candles in the patterns are too long and large. Too long and large. This is especially true for patterns like three white soldiers, or three black crowns. If the candles are excessively long, the market might have become overbought or oversold too quickly, and a short-term correction is likely to occur immediately after. While the trend might continue, entering a trade after such a long series of candles can be risky. And this is also the signal is for FOMO. Okay, because that time there's a lot of investors and traders FOMO for the current trend, and the charts always acknowledge for this FOMO reaction. And it's time to trap, and each on the base is joining in the dangerous price level that is happen. Okay, so too good to be true. Okay, so remember this sentence. I heard this a lot, and sometimes it will be correct when we do analysis for three white soldiers or three black crowns. Okay, we need to pay attention to this type. Two types of patterns, three white soldiers and three black crowns. Too good to be true. Okay, so this is the lesson, our today lesson. How it's gonna be look like, the feature, how to set up entry zone, stop loss level, and take profit. And the false signals from three candle patterns we need to observe when we recognize that, oh, this time these patterns happen. Okay, we need to looking at where is it location, where is it locate, and the strength of confirmation candle. Okay, the third factors we need to pay attention to is multiple time frame confirmation. Okay, need to switch flexibility between bigger time frame and smaller time frame. The fourth factor we need to pay attention to is the lack of volume. Yeah, and the last one, pattern is too perfect.